All right. Welcome, everyone, to another edition, I think episode 6 of TradeView Live. We're back on our bi-weekly, bi-monthly, every 2 weeks cadence. So however you want to describe that. But my name's Ben Tracy. I'm your host. I lead strategic business development at Vizion. And I'm joined here by Kyle Henderson, our CEO and co-founder. So Kyle, what are we here to talk about today? What is TradeView Live for any newer members of our audience?
Yeah, in short, we're talking about what's happening over the next few weeks in global trade. We're leveraging the Vizion TradeView platform, which provides forecasts and projections looking 3 months into the future. And we're breaking down whatever questions we field on a daily basis about, what volumes are coming to the United States, where they're coming from, what volumes are going to other countries, what products are being moved or going to be moved. And yeah, we just respond to the audience and answer the questions we field every day, and then ideally questions that also come through the comments here during this episode.
So is this a demo? Is it a discussion? Is it a presentation of metrics and insights and forecasts? And the answer to all of that is yes. It's also whatever you want to make it. So for all of those that are attending, drop in comments. What's on your mind when it comes to global trade trends in container shipping? And we're happy to address those in the time that we have left. Why don't we start with our explanation of what TradeView actually is. So what is TradeView?
Yeah, so it's the industry-leading trade intelligence platform. We see more plans for international freight shipments. Well, we're the only platform out there that sees the plans for international freight shipments. And in terms of the freight visibility we have, it's 3 times more than any other platform in market, 57% global coverage. We take this information and profile 1.5 million companies worldwide, provide 90-day trade forecasts for all of them. We also use this to understand the supplier and product networks and map those in great detail. And we've even baked in an AI researcher in a box that delivers custom insights to whatever prompt or question you want to ask it. You can see a little bit of the platform here on this slide, but we also package this platform in a few different ways. Our TradeView Explorer, which gets you access to all those company profiles, product profiles, location profiles. TradeView Intelligence, which gets you access to our custom report builder, Data Explorer, as well as the AI intelligence researcher. And then coming soon is TradeView Performance, which is all things supply chain and logistics performance and forecasted performance as well.
Wonderful. So let's rehash what's happened in the last 2 weeks. Seems like a lot just based on the headlines. Sorry. Before we do that, where does this data come from?
Yeah, and this is the question we get a lot, which is, how are you able to forecast so accurately looking so far out in the future? Well, we built a platform in the past 5 years connected to more than 270 different data sources worldwide, ocean carriers, trucking companies, satellite monitoring, rail carriers, booking platforms, etc. And the way we can forecast the future is we leverage bookings, and we see globally more than 40% of all bookings made globally every single day, which tells us what products are being moved by what companies and being bought by what companies, what's the routing, etc. So with that information, which is operational information for many, many different companies, we're able to forecast the future in far greater detail than any solution to date.
Wonderful.
But not to cut you off, Ben, but now.
Now we can talk a little bit about what's happened since our last TradeView Live session. I think where we left off 2 weeks ago, bookings were surging. It was sort of the headline. We were a few days removed from the temporary pause or reduction in tariffs between China and the US that was announced to last 90 days. And things were not only returning to normal, but were surging in terms of new bookings. So where are we now a few weeks later?
So for the week of May 26th, we see global bookings. So this is bookings for freight from anywhere to anywhere. We saw in that week of May 26, 1.92 million bookings being made. And in terms of a week over week change, it dropped a little bit week over week, 12%. But as Ben said, it had been surging the past few weeks. As you can see here in the week over week change here, I'm not sure if my mouse is showing up. There we go.
Yep.
Surging week of May 5th, nearly 30%, 20%, 19% the next week, a little bit the week after that, and then a slight drop. But I think the most important thing here is year over year change. It's relatively back to normal in terms of volumes.
Yeah, if you go back to the week of March 24th, sort of right before the Liberation Day announcement, when we look at weekly over week change, between 1% and 2% in comparison to the year before, pretty flat. We're almost at that volume of about 1.95 million weekly bookings.
And the color coding kind of tells you that, right? This is 5 different colors you can choose from. White not being much change, light blue, light red being a little bit of change, and red or dark blue being a heck of a lot of change. So going from this area where we were kind of getting past this point of, say, front loading anymore, and having some kind of normalized week over week activity, to getting back to, hey, it's the first the first not colored cell we've seen in 1, 2, 3, 4, 5, 6, 7, 8 weeks.
Exactly. So potentially, at least from a global perspective, we'll look into a few different regions and cuts by industry and whatnot. But from a global perspective, things are stable, at least for the last week.
But what does that mean when we get into a bit more detail? So not just global bookings, but how about bookings made from anywhere in the world to the United States? So
And
US bookings.
And the context is there's been a lot between trade deals with Europe and, in the last week, what could be described as heightening tension in the relationship between the US and China. So how might that be impacting import bookings, considering that technically we're in this sort of reduced tariff period between the US and China? So what about US imports overall? What's happened in the last few weeks?
Well, we can see that something of a similar story to the previous slide. We are only 3% down year over year. So let's say it's getting back to something of normal in this regard. But still, the surge has pulled back a little bit. The week over week change is 16% down. But remember, that's in context of the previous weeks, 40%, 48%, a negative 25%, 13%, just whipping back and forth, flip-flopping back and forth. So US imports year over year change, getting back into this normal band with only a 3% reduction year over year.
About 400,000 TEUs booked last week, which is definitely higher in comparison to the week of March 24th or March 17th before Liberation Day. But when you look at seasonally, and if you remember, in 2024, we had an early peak season, which began at the end of May, early June, about 45 to 60 days before normal peak season were to begin. So in comparison, we are at that same volume. So one could argue that this early indication, in the past week or two, might be an indication that we are entering an early peak season, mimicking the volumes that were booked in the year prior.
And this is not quite a fair comparison, but in the context of what we have here on the screen, if you go back into February and March, you kind of see this quieter period. Quieter, I mean, in terms of things are more consistent, things are more usual.
Yep.
The changes and such are not as severe, where you should be expecting 350,000 roughly import bookings from the visibility we have, which is only a certain percentage of the total, but it's a very healthy percentage. And if you look up here in terms of what we've been seeing the past few weeks, we're at 399, so slightly higher in terms of what you normally see like in February and March. But to Ben's point, early peak season, starting to be peak season, we would be expecting to see a bit higher, and year over year change supports that. But to the previous weeks were 476, 479, and to some down weeks like 230. You can see this in the raw numbers, how much the flip-flopping has
So when
has.
you look at how much is now a part of this surge, or people are moving shipments forward, or orders they place with factories are now getting loaded onto containers, it seems that that surge has started to taper off, and we might be entering somewhat of a relatively normal early peak season, to the extent that this is a repetition of a pattern we saw 1 year ago. What about, in particular, China to US? So this is where a lot of our attention has been for the last 8 weeks. Things were up, things were down, things were up, things might be down again. But what do we think in terms of the trends?
And the most severe threat of tariffs being applied for any other
Yes.
country, right? So where are we at? Well, year over year change, we're at 0.1%. So we got a white box here for year over year change. Week over week change to be somewhat expected because we had some pretty high volumes this week of May 12th. Also, like the week of May 5th, which again, this first week of May is always a little interesting because it's International Labor Day,
Correct. Yeah.
or Workers' Day. And so you typically have this kind of like, not as severe, but like Chinese New Year, where you have these weeks or these periods of time where East Asia is shut down to a certain extent for holiday. But even if we go back to like that February, March timeframe, we're typically looking at, 100,000, 120, 130,000 is kind of usually where it's sitting. But even here, 168,000, pretty
Yeah.
good year over year. And again, another indication of kind of where you'd expect with the beginning of peak season, but far more back to normal.
Yeah, it's the first time. Same
Yeah,
as before. First time in what, 8 or 9 weeks that the year-over-year change is not in the red or blue.
it's the first
Dramatic.
white box
Yeah.
we've had in 1, 2, 3, 4, 5, 6 weeks. So
Yep,
yeah.
exactly. Very interesting, and I think this one in particular is one we'll want to watch closely over the next couple of weeks.
So looking at this in a bit more detail, daily China to US bookings. So we're going to pull up the chart and graph of this, not just looking at the raw bookings, but also the rolling 7-day average.
I think this really speaks to like the surge that we experienced a few weeks ago. So
And the dip. And the
yeah,
dip.
and the dip following the surge. So really looking at that rolling 7-day average, you see just how low it got. And of course, this began actually back at the last week of March. So April got to a very low point, almost what 5,000 TEUs were being booked per day, skyrocketing then to almost almost 35,000 TEUs, which some of those daily figures were over 48,000, a daily figure that we had not seen in over 24 months. We're now tapering down from that figure, and the volume is definitely still above where we were in that depressed period. But it seems to be sort of normalizing. You could probably say in the last few sections of that rolling 7-day average, it's almost flat, right? It doesn't seem to be going up or down. So again, something that will be confirmed in 2 weeks' time if we really have achieved a sort of stabilization, if that rolling 7-day daily booking average remains relatively flat.
And it would be interesting, actually, just thinking about this, to see this chart, and maybe this can be a quick request out to the Vizion team. If we saw this chart where it wasn't the individual days and it wasn't the 7-day rolling average, but maybe it was the trend line of the 7-day rolling average for this time period, this year, last year, the year previous, just to get a sense of, because this question I fielded a few times of, okay, well, there was like a deficit in bookings for a period of time. There was a surge in bookings for a period of time. Have we gotten like back to normal? Has like the deficit been filled by the surge? Is this, what does this mean for inventory levels? So it'd be interesting to see this as a trend line and how close the slopes of those trend lines play out against one another for years where you didn't have this flip-flopping, surging deficit.
Yeah, we did something that was a rolling 7-day average, but expressed as a year-over-year percentage change. So each day would be comparing the rolling 7-day average from that day the year before. So that could be a different visual we'll play with maybe for the next episode. Okay, so we talked a little bit 2 weeks ago about the fact that our current data shows what shipments are estimated to arrive in what weeks going into the US, but really going into any country. So with particular attention that we wanted to pay to the US, the idea was to take that current volume of shipments that we have estimated to arrive and determine exactly how much of the total we think it represents. So our data science team has been hard at work at modeling based on historical totals that are published by US Customs to build what is our first release of a modeled forecast, not just telling our customers, here are the current TradeView shipments as far as TEU volume that are arriving into the US or into US ports or wherever it might be, but here's a modeled total of what we think the projected total will be. So we're putting this out there. In 2 weeks' time, we'll know how accurate we are. But the reason we're putting this out there is based on our historical back testing, we feel that our US forecast is within about a 6% margin of error. So without further ado, for the next 3 weeks, our projected US import totals, beginning with the week that we're in now, so the week of June 2nd, just under 600,000 TEU. For next week, we expect it to rise, and this is probably due to the surge in bookings that we saw a few weeks back. We expect it to rise to 641,000 TEU and actually continue to go up in the week of June 16th to 668,000. So by the time we meet again, we'll have the actuals to report against for at least the week of June 2nd and the week of June 9th. And again, what you see on that lower chart or that lower line are the current shipments in TradeView that have an estimated arrival, and above it is what we project the total to be.
Yeah, and that's why we use the term estimated TEU volume. We're very open to feedback on what you guys think it should be called, but based upon the estimated arrival dates for shipments we currently see booked in transit, this is the estimated volume lower line. And then we're using the model we've built to then say, this is how much we see, which we typically see 35 to 40% of US arrivals at bookings weeks and weeks and weeks in advance. So using that, then going up to this forecasted volume level, maybe it's a projection. I'm happy to give feedback on terminology, but yep, fingers crossed. Let's see how accurate we are. As Ben mentioned, from our back testing, we found ourselves to be accurate within plus or minus 6%.
And we can actually forecast this out 6 weeks. I think we're choosing for this initial public display of this feature to just forecast the next 3 weeks. But again, in 2 weeks' time, we'll be able to assess if we were in fact within that 6% margin of error.
And behind the scenes, we're also working on not just the estimated volumes, which is quite easy to do, but the forecasted volumes on a port by port basis in the United States as well. So if you're interested in that, please let us know, because we're going to be asking people for feedback as we start to roll this out.
Well, we've got one port we've selected, which is where a lot of the attention is going right now, the biggest port in the United States, so US LAX. Our current model is actually a slightly higher margin of error. It's closer to 10%. But within a 10% margin of error, these are the forecasted totals we expect to arrive into LAX. This week, just over 107,000 TEU. Next week, climbing up to 123,000, and then staying relatively stable for the week of June 16th, but dipping back down to 122,000. Again, we can do this for any of the major ports in the US out 6 weeks, but quick preview of that feature here for LAX. And again, in 2 weeks' time, we'll be able to actually report on the totals that US Customs gives us for the week of June 2nd and the week of June 9th. So
go ahead.
Yes, a pivot away from the forecast. We had some comments from customers about breaking down different sectors and industries, and there's been a lot of news and attention just in the past few days about steel and aluminum. So there are a couple of HS codes that encompass the iron and steel category. That's HS code 72 and 73. When I look at how that's been booked on a weekly basis, we didn't select for a specific origin in this case. We just wanted to show all global bookings from all origins going into the US for this steel category. knowing that, again, there was a temporary reprieve. And for now, it appears that that's going to be removed and that the tariffs on steel and aluminum will return to 50%. So with that in mind, looking at the last 3 years of data, including this year, 2024 and 2023, what do weekly bookings look like, and how has this year in its dramatic up and down and lumpiness compared to 2024 and 2023?
And
And
again, to leverage the color coding to help everyone. And 1, 2, 3, 4, 5, 6, 7. In the past 7 weeks, we haven't seen anything that looks like normal. Right.
yeah,
So in this past week, most specifically, a year-over-year change of 21% drop. So pretty meaningful. And then you can see the upswings and downswings with down 17, up 43, up 14, and down 10, down 24. So it's been an interesting ride as you look on this chart over here on the left around steel, iron and steel into the US the past
yeah.
few weeks.
If you're a shipper, and we can go to the next slide, which also shows aluminum, but if you're a shipper and your products are falling under these tariffs of steel and aluminum, I think you're probably having a very hard time determining when you should book, how much you should be booking, when you should be looking to bring in these goods. Because again, this is based on the tariff is based on when the goods actually arrive to the US.
And again, this is HS code 72 on this slide. And actually, I want to get a description of HS code 73 real quick if you want to speak about this, Ben.
Yeah, they're both very similar. My understanding is they both fall under the category of steel in general, but we see a very similar trend line of dramatic increases a few weeks ago. Again, that was during the announcement of the temporary truce or reduced tariffs between the U.S. and China, and then it appears to have gone down in the last 2 weeks.
And just to clarify, 72 is iron and steel specifically, and 73 is articles of iron and steel.
Yep. So we think a lot of industries, but in particular automotive, are going to be impacted. Of course, aluminum as well. That's HS code 76. I would say that aluminum, and I'm having a hard time zooming in, probably not as much lumpiness up and down. It just seems that the lines are not deviating as much from one another as the previous two slides.
You also have to look back over here because it's 4664. This is showing the entire year.
Yeah.
For the previous years, but we've only gotten up to this point.
Correct.
For 2025.
But if we look at the yellow line from 2024 and then the depressed volumes in 2023, which were actually well above that 2 years later, I don't see as much of a gap in comparison to the previous two slides. So it might be that just these HS codes are not seeing as much volatility in terms of shipping patterns as the ones that are more impacted in steel. So we other HS codes, specifically finished vehicles, textiles. We see a lot of obviously apparel products and clothing impacted by that. Just an example of the ability to use TradeView and not only look at these high-level booking trends between countries or regions, but also cutting it by sector, by cargo type.
I'd like to also clarify what you saw before when we were talking about booking forecasted, right? Estimated arrivals and forecast arrivals, we can also cut by products, etc. So you can see the estimated arrivals in great detail when you want to filter to specific companies or specific products, etc.
Correct, absolutely. But I would say between these two, we're seeing similar trends. Both with vehicles and textiles, and the next one with machinery, in that the weeks of May 5th, the week of May 12th, what represented that surge. And we've been starting to taper off since the week of May 12th for the last 2 weeks, returning in some cases to an equal amount from the year before. But in the case of these two HS codes, we're actually below that week from the year before.
Now, electrical equipment, though, is still getting pretty beat up, right? Yeah. So it's closest to, I'm not quite sure why this cell got colored white. I don't think that's correct. But we're seeing -33, -32, -44, -21, -9, -30. This is depressed year over year.
I think it's coded white because that's actually the one
comparatively to all the numbers. Yeah.
Yeah, comparatively speaking.
So the 15 and the 21 being white, but I'm not sure why the negative value. Well, take the numbers are correct. I'm not sure if the coloring is correct.
Yeah, in general, both of these HS codes show well below last year's volumes, really, for every one of these weeks.
So machinery, electrical equipment, which I've also heard, I'm thinking about a few different companies up there. I've had a few conversations around this company named Generac, which was solely dependent upon sourcing from China, specifically for much of their machinery. And this is an interesting conversation with a lot of company supply chains when it comes to, say, machinery or heavier industrial equipment, et cetera. Those are not supply chains that can be moved easily.
Yeah.
Not saying others are
right.
all that easy, but relatively speaking, it's a high capital investment to be able to be doing that kind of manufacturing elsewhere.
For sure. Yeah, 100%. So we've got a few minutes left, a couple other cuts of combining both the origin filter, so in this case, China to the US, with the HS code filter. So a lot has been written about the furniture industry in particular being impacted by these tariffs. And what you see are dramatic decreases in April, followed by an incredible surge. And so the pronouncements, like the degree of change, is just multiplied here when you see it go down, see it go back up.
And still surging year over year.
Still surging year over year, but again, kind of tapering off in comparison to the week over week change of 246% from a few weeks ago. Same thing for glass products, 400% week over week change is just absolutely incredible. And again, tapering off from that as well.
Well, we have 2 minutes left, Ben. I guess this is the time we can ask people for questions. If anybody's out there, please drop a comment. I don't know if we'll be able to answer the question right this second since there's only seconds remaining, but we can certainly follow up with you afterwards or make sure it gets into the presentation 2 weeks from now. But again,
I would say any feedback or comments on the forecast. This is our first time putting a number out there. We're sort of calling it in a sense, at least for the next 3 weeks. And so we'll come back to this in 2 weeks' time, but I'm sure we'll get a lot of comments and feedback before then.
Yeah, and if you're interested in checking out TradeView, we do offer 2-week trial seats. You get a number of sessions with the subject matter expert team to walk you through the platform, help you figure out how to answer your questions that are specific to your business or your research. And again, no other platform has this much forward-looking visibility, this much data coverage, and this much up-to-date information. I'd say even this powerful report building system.
Absolutely.
So please check us out, visionapi.com. We'd love to show TradeView off to you.
All right. Thanks, everyone. Have a good rest of the week.
Cheers.
Bye-bye.